Hello there. We head over to Australia today to see what exactly is going on with the Aussie dollar and why Deutsche Bank says the Aussie dollar could be on the verge of a benign collapse. Joining me on the line is David Campbell, CEO of Burton Capital in Sydney. David, hi. Do you think the Australian dollar is facing a collapse?
I think collapse is probably a strong word. I think definitely the risks favour an orderly decline. At the moment, it looks to me like it's probably going to be limited to the low 80s, but definitely the risks would favour a lower currency than higher.
But what do you think of the Deutsche Bank comment, which stipulated that they expect a much more bearish reaction from the Aussie dollar, and it could be down near the mid-60s by the end of next year?
A lot of that's predicated on interest rate differentials, global circumstance. While I can see their reasoning, I don't dispute their logic. I think that it's a long time frame, and I find that hard to justify in the current situation.
Okay, what about the labour market though? Because some analysts are predicting improvements here, and that could really help to boost the Australian dollar, couldn't it?
There's quite an interesting sort of array of factors affecting Australia in the next 12 to 18 months, and one can argue pretty strongly on either side. I mean, as you say, the labour market could pick up quite substantially, especially if the infrastructure package that the government's pushing quite aggressively here comes into play. They want to be known as the infrastructure government, and that's probably going to require a bit of manpower, so that would be a big boost to local employment. Definitely, I would see that being a labour market positive.
China, once again, is having issues with its iron ore stockpiles amidst a reduction in property lending, and this is undoubtedly hurting the Australian economy and its currency. Now, I've spoken to some analysts who say this is just a blip and that actually China is healthy when you consider it's still growing. So, should we really be concerned about the long-term effect it could have on Australia economics, including its currency?
China is an interesting factor and one that is very hard to predict in the medium term. Currently, there's definitely some issues going on there with their currency. The government seems quite keen to instill a bit of volatility into the local currency. It appears they want to shake some of the speculators out. So that will be an ongoing factor in the medium term for the Aussie dollar. You've seen quite a substantial weakening in that currency out of its normal trading band in the last few days. I mean, it was down about 2% the other day. That will definitely have an impact on the Aussie. That will shake out a lot of the Aussie dollar bulls that are sort of popping up at the moment. But whether or not China can maintain a reasonable pace of growth, that remains to be seen. I think some people are looking at 5.5% in the medium term for China, from a current level of about 7.5%. That will have an impact. But it's a bit of a lottery with the Chinese figures, so it's hard to predict that one.
Finally, I just want to touch on the currency swap deal agreed between another Asian country, Korea, and Australia off the back of the G20 last weekend. Do you think this will boost trades, that's the agreement, successfully enough to bolster Australia's economy?
Korea sits currently in top 4 trading partner of Australia, and we have a substantial trade with Korea in terms of minerals and resources and fuel. I think that's probably our largest export to Korea. The government seems quite keen to balance that out a bit with some more agricultural exports and manufacturing exports. For example, the trade agreement is looking to drop the tariffs on beef. That will definitely improve the beef exports to Korea quite substantially. So it looks more of a balancing out of our exposure to Asia in terms of our reliance on resources. So yeah, that will definitely have a positive impact.
Okay, thanks for joining me today. David Campbell there of Burton Capital. If you'd like to see how the Aussie is expected to take shape over the short, mid and long term, head over to our forecast programme with Natalie McDonald. I'll see you next time though. Bye-bye.